the adoption of passive strategies, tracking indices continues to grow. As at the end of September 2016, the amount invested passively, tracking indices through ETFs and ETPs stands at over $3.4 billion globally. We've seen broad adoption of passive strategies in frontier markets, and are now seeing passive strategies adopted more broadly globally. Hello, I'm Sunjiv, Mainie, and I'm delighted to be joined today by Bernard Caralp, Chief Investment Officer and Head of Asset Management at SedcoCapital. We're going to discuss the approach that they've taken to implement passive strategies into their overall investment strategy. Thank you for joining us today, Bernard.
Thank you.
So let's set the scene. How are you seeing passive strategies being used in your region?
I think that passive strategy in the region are following the same trend as globally. There are two main reasons that people are more looking at, or investors are more looking at passive strategy. I think the first one is the level of fees, and the second one is as well the difficulty for active manager to overperform their benchmark on a sustainable way. So it's very important to keep that in mind, and like everywhere, investors are more and more interested in looking at less active strategy or more passive strategy. But there is another point, because as you know, SedcoCapital is a Sharia compliant asset manager and as well an ESG manager, asset manager. And we noticed as well that it was very difficult sometimes for active manager to transfer the strategy from a conventional world to a constrained universe. So this reason as well push us to assess more and more the interest to include passive strategy in our investment universe.
Right. And how are your own clients, how are they perceiving passive strategies in this space?
I think our clients, in fact, we need to be very realistic in our world. The client is king, and sometimes the offering by asset manager comes from the demand from the clients. For the reason I just explained, I think that the client, we try to meet the client expectation in terms of level of fees, in terms of performance, overperformance against the market benchmark, through an approach we call core satellite approach. The core is the core pocket, I will say, the regional passive strategy, according to the regional exposure that our client wants to have. A satellite, the satellite pocket is more active, or as we call factor investing strategy as well, to complement the performance, the relative performance we can get through a regional asset allocation based on the core.
Okay, so I guess you may have answered this question partially. In terms of using passive strategies, you mentioned their low fee, for example. Mm-hmm. But where exactly does your value add come in? Is it through the satellite core implementation? Can you take me through that?
Of course, we have this approach which is clearly defined today for our client, is what we are proposing for the reason we just discussed. But on top of that, we have a very important investment processes, disciplined investment processes. We have a team fully dedicated to the management of the portfolio. We have the performance as well. But where we are a little bit different from other asset managers is when we look at a passive mandate or passive fund, we don't look at it in a passive manner. Meaning, let me take an example to highlight that. Is we have a US passive fund. The US passive fund is, of course, is part of core pocket, and we are going to get exposed to the US. So we know that. But as much as important of that is through this passive fund, we know that we will be exposed to up to 78% to growth stocks, 22% to value stock, 74% to quality stock, and so on. So this kind of characteristic allow us to optimize the satellite pocket according to our view and how we want to define the best mix for our clients. That is the first thing we are adding, where we are adding value, is the way this characteristic are playing within the total portfolio of our clients according to what we want to play. Our view, current view, macro financial views. The second aspect is, and I think it's an important point when we do a portfolio optimization and we are managing investment portfolio, is we are not only looking at the asset allocation. The asset allocation gives us some guidance, but we have our universe, passive and non-passive strategy, and we are looking at optimization method to try to define the best mix according to the universe we have, the best mix for our client. And I think this is the second aspect that we are creating value for our clients.
Okay, that's interesting. So I guess you need to work very closely with your index providers to get exposure to assets and strategies.
We need, and thank you for this question, because it will allow me to rebound about on a very specific aspect, is to use this satellite and to extract the maximum of added value from this satellite pocket. We need to have the granularity. And as we are fund of fund managers, this granularity must come with a close partnership with index providers to be able to define the right index according to the kind of strategy we want to implement without being fully passive. I think it's very important partnership we need to move ahead with.
That's very interesting. Bernard, thanks very much.
Welcome.
For additional information and to learn more, please visit www.spdji.com.